Well, I mean, this is what central banks are doing. I'm not talking about your central bank, our central bank in Britain. I mean, yeah, they'd rather not discuss the subject. Um, but I think the central bank community, particularly in the global south, BRICS and so on and so forth, they can see what China is doing. With the SGE opening vaults in Hong Kong and also Saudi Arabia, and there are probably plans for other ones, or certainly facilities elsewhere, whereby gold can be exchanged for yuan. This is setting up a system which will allow the Chinese, if it is necessary, to protect the yuan's value by turning it into a gold substitute. But that will be at the international trade level. The idea that individuals in China would be allowed to, have a gold exchange, if you like, for their yuan. I mean, I don't see that at all. The authorities in China, I think, are all about hanging on to what they've got. They don't really want to part with it. And I think it would be a mistake to sort of think that, the Chinese authorities, whether we're talking about PBOC's reserves or whether we're talking about the hidden holdings, sort of spread around the various communist organizations, government organizations, I don't really see that they will be feeding this new vaulting system outside China. I think they're going to still hang on to their gold. But I think what they will do is they'll say, well, what you could do is you could acquire some gold, put it in that vault. You could exchange it for yuan when it comes to trade settling and all the rest of it, so that you foreign country, have the facility to trade in a gold-backed yuan. They will set the rate at some stage. I think that's inevitably what's going to happen. And it doesn't really require China to part with some of its gold. Maybe a small amount, but basically, I think the idea is to make the yuan, if you like, the dollar's replacement. And this one will be a lot more secure than the dollar. I think that's the important thing. And as the dollar declines, we're coming to, there's no doubt in my mind that we're coming to the end of the fiat currency system. The Chinese, I think, are perfectly aware of this, and they want to protect their currency. They want to protect, their position, and they don't want other currencies, for goodness sake. If the dollar goes down, what happens to the other currencies? They go with it. It's as simple as that. So they will want to trade in their own currency. Of that, I'm absolutely convinced, and they will want to protect the value of their currency. So we can see this is beginning to happen. Now, I think the central banks around the world can see it. I think governments are beginning to see it. I think some of the really big players, like ultra high net worth individuals, the sort of really wealthy families around Asia, who liaise with politicians, who have them round to dinner, and all the rest of it. I think this is the back chat that goes on with these meetings. They know about it. I think that some of the smarter hedge fund managers in the US probably know a little bit about it or suspect it. The rest of the investment world has not got a clue. But you'll find that the information filters down. It'll filter down gradually as, events unfold. And there will be if you like, a growing understanding actually about what actually is happening. And we're looking at the end of the fiat dollar. I think this is really what it's all about. I think that's a good way to describe it, Paul, because, the thing about Bretton Woods is that it was this sort of high level, you can't exchange your currency for gold, but this is a system which basically everybody who's in Bretton Woods, we're in there at a fixed rate, and gold basically is the tie for all the fixed rates. And that was fine, so long as the Americans, who had the bulk of the gold, certainly in the late 1940s, that was fine until the Americans began to run out of gold, and then you had the end of Bretton Woods. And Zoltan Pozsar, I don't know, you remember him? He was Credit Suisse. he described the current situation as Bretton Woods 2, and which is not the rather clumsy way of putting it, because it's not a Bretton Woods system in any way. So you had the Bretton Woods system, you had the fiat currency system, and he was raising the question mark: are we going into Bretton Woods 3?
Right. Yeah.
In other words, is this the end of the fiat currency system, and it's going to be replaced by something else? That was the question he raised, and he was raising this question 3 or 4 years ago. And I think the thing that's really done it was COVID. When economies shut down, there was an explosion in government debt as a result. And it's clear to me that large parts of our economies haven't recovered from that at all. I mean, you've got some zombie companies who took on debt basically because they ceased trading for however many months. They took on debt and they've never really got rid of it. And the problem is that interest rates have gone up. They can't afford current interest rates. And of course, this has led to other distortions. I mean, for example, you've got the shadow banking system, so-called, in America. In this case, we're looking at private equity and hedge funds who use their, if you like, their rating in order to borrow from the banks to lend on to those who basically the banks won't lend to. Why won't the banks lend? I mean, the banks aren't stupid. They won't lend to these companies because they're zombies. So the zombies are getting sort of payday loans out of, the shadow banking system. And that's a big accident waiting to happen. It really is. I mean, and this is what Jamie Dimon was referring to the other day. Economically destructive to have a stable currency, which is absolute nonsense. And you and I remember times when the Japanese yen was strong, the Deutschmark was strong,
Dutch guilder was strong, and we were thriving in the 90s as well.
Exactly, and you did jolly well. I mean, okay, no businessman in the export business likes a strong currency, because they like to devalue their costs. Of course they do. But, the Germans, Mittelstand, got round this basically by producing superior products. You would buy German because it was better than anybody else's, and that was the way they worked it. And China is actually doing the same sort of thing. I mean, its technology has actually made its exports really incredibly cheap. The trouble is that everybody is, like the Brits, the Americans, and all the rest of it, just sort of try and stop the Chinese imports coming in the belief that that's the source of all our troubles. No, it's not. They're giving benefits to our consumers. And this sort of thing is very, very good for our industry because it makes them actually, sort of produce things more efficiently because they have to respond to it. Well, I think, the thing that's interesting, I did a bit of research recently into what happened in Germany following the First World War. And there were 3 phases. And we've gone through 2 of them. The first phase was between 1918 and 1920. And basically, the German economy had to adjust, if you like, following the war. And the purchasing power of the Reichsmark actually fell quite significantly. It lost something like 4/5 of its purchasing power. But then there was a period of stability, and admittedly helped by the fact that German exports became very competitive with the lower cost base and all the rest of it. But this led to a stock market boom, where stocks went up about 300% between February 1920 and December 1921. You had this sort of wealth was spreading amongst the middle classes and all the rest of it. And so, everything had recovered very well. And indeed, the mark, the Reichsmark, rose against the dollar, which was fully convertible into gold. It was the best performing currency in the world, just for that brief moment of time. Now, we then had the stock market began to crash from December the 1st, 1921. And between December the 1st and 1921 and November 1923, in other words, sort of 22, 23 months, something like that, the Reichsmark collapsed in value. So much so that one gold mark, pre-war gold mark, was worth 1 trillion Reichsmarks. And to put it in, against the gold-backed dollar, before the war, a Reichsmark was at 23 US cents. So, you're looking at somewhere between 4 and 5 trillion Reichsmarks at the death per dollar. And now, fast forward to today. Our First World War was actually COVID. We shut down our economies. And the central banks reduced interest rates to zero. And in some cases negative in Europe, for example, and Japan. That led to sort of a rise, if you like, in bond yields, in inflation and all the rest of it. Not as acute as between 1918 and 1920 for the Reichsmark, but nonetheless a similar situation. Since roughly late 22, 23, whenever, bond yields have stabilized, interest rates have stopped going up, and indeed bond yields have gone down a little bit. But the important thing is that the stock market has taken off everywhere. We are now about to enter the third phase. And the key to it will be to understand the moment the credit bubble bursts. Because the whole thing has been driven by a credit bubble. If you look at lending to stock investors, the level of margin loans is now $1.2 trillion. And that backs roughly $3 to $4 trillion worth of stock. This is, I tell you, this bubble is the biggest ever. And if you want a psychological marker, the rise of Bitcoin is rather like your tulip mania, but without the bulbs. I know you did jolly well out of Bitcoin in the early days, but it is not legal money. And, these hodlers who are sort of so keen to think it's the money of tomorrow rather than all the rest of it, got no legal status whatsoever as that. And that does matter, even though they would say no. And they sort of say, well, it's going to be complete anarchy. Okay, it's going to be complete anarchy when currencies collapse. But do you think governments are going to relinquish their hold on their things? No, they're not. They tighten up. And not only that, but nobody is going to be, when you can't rely on electricity, you can't charge your phones or whatever, what use is it? No.
Yeah.
And not only that, but it's to misunderstand the role of gold. The role of gold is not to rise. The role of gold is to tie the value of credit. Now, just imagine if you were, let us say, you have an idea, you want to manufacture something or whatever, or you want to expand your business. If Bitcoin was the money, then you would go to a bank and you would borrow in credit on the back of Bitcoin because the bank would create the credit. This is the way it works. Okay. With gold, that, let's say, over the next 2 years, pretty much what the value of that loan will be and what you've got to repay. But with Bitcoin, you don't know. With a shortage of Bitcoin, if there's any economic expansion, what you're going to see is the value of Bitcoin rising if it was money. So you as a manufacturer, you can't go out and borrow credit on the back of Bitcoin in order to expand. This is going to drive you back into medieval times. It just doesn't work.